Cuck it.
Welcome to Wage Cucking with Jmo.
Welcome back to Wage Cucking with Jmo. I'm doing the intro, but we're doing an in-person episode today, which is quite fun. So how are you guys?
Not too bad, not too bad. Me and Andreas were just in Singapore for Token 2049.
Yeah.
We got all the alpha.
Yeah, we have some of the alpha.
This is some of the alpha. Maybe none of the alpha. We're not exactly sure.
Yeah, we listed one of the things we could talk about was what was happening in Singapore. And I don't know, it was mostly real world assets. That's the thing.
Yep. I feel like there's a pretty big emphasis on real world assets. We met with some of the people from Ondo Finance. Shout out to Jordy, a previous podcast member who is bringing that. But yeah, it's pretty interesting. I feel like a lot of the layer twos, a lot of the newer blockchains looking to make DeFi a little bit spicier, a little bit more profitable. With the US Treasury bonds, the interest rates being so high, I think Ondo Finance is one of the companies that is doing that, basically purchasing US Treasuries and turning them into a stable coin that generates yield on chain. It's basically the same business model as like USDT Tether, except in Tether's case, they keep 100% of their yield.
And it's like, I don't know if this is true, but somebody said either it's the most profitable company if you take into account how many people work there, Tether. I think that was speculation, but it can't be far from it.
Yeah. I mean, if you think about it, their business model is amazing. They don't really have to do anything, right?
Yeah.
They already had this ecosystem built up around their token. So they have somewhere between I want to say 70 and 100 billion in Tether issued. If they just put that all in US Treasuries, they're making 5% a year. Their overhead shouldn't be that high. So they're probably making $1 to $2 billion every quarter.
What is the rate on Treasuries now?
I think it's 5.5%. I'm not sure. It's somewhere around 5.
Yeah, I think it is. Yeah,
isn't this what banks were supposed to do with your checking account?
Yeah. But
they just failed.
It's the same. It's the same business model as the banks, because the reason why banks make so much money is you deposit money into your savings account and they put your money in in treasuries. They can put your money in mortgages, all that kind of stuff, and they earn all that yield, and they pay you fractions of a percent. I think in the US, your average savings account gets, I want to say, under 0.1% yearly, which is basically nothing. And that they're probably making at least 45% on your money. So yeah, it's a pretty good business model they have going.
No, so I was saying that's basically what a bank is supposed to do with your checking account, which is they invest it in, I guess, short-term things, and you get nothing.
Yeah.
It's the concept.
Yeah. But the crypto space, I feel, is pretty competitive. So if there are companies that want to compete with Tether or USDC, which basically pay no yield on your stable coins, even if they offer a third or a fourth of what the treasury rate is, it's still you're still making 1 or 2% on holding a stable coin. And the interesting thing about DeFi is you don't have to allocate that stable coin into a bank or into an account or anything. You can use it on chain for something and still earn that yield. So you can use it stuff like an automated market maker liquidity.
Yeah, of course.
You can use it as collateral, stuff like that. So it definitely brings some interesting use cases to crypto. So I hope we see more companies like that develop some sort of stable coin that ties a stable coin to a real world asset and then also gives you some yield on your stable coin while you use it for other purposes.
So you would have the token that represent the treasuries, and then would it be do you think it'll be a rebasing token?
So specifically with Ondo Finance, I talked to them about it. I think they're going to release 2 versions. They're going to release a rebasing token, and one that it's similar to how, if you look at the Lido Ethereum token, you have the STETH, which is a rebasing token, and then the wrapped version, which is a non-rebasing token, but the exchange rate slowly fluctuates based on the yield. So the wrap version, it'll be the same number of wrapped Ethereum, but the number will go up based on the beacon chain rewards yield.
Yeah, no, that would be And then, like you said, if Tether is now investing in, I guess they're investing in treasuries. I mean, that's what they're doing.
Yeah.
So then if somebody comes out and they're like, hey, we can get into this business, but it's hard to get started. We have to pay all these fees and licensing and lawyers. So we can give you 1/3 of what we're making.
Yeah.
You're like, oh, that's great because I'm getting nothing. Somebody else is like, hey, so we just reused the lawyer's opinion for free. So we can give you half of the yield.
Yeah.
And then we'll just get a race to the bottom where suddenly you're getting 5.25.
Yeah.
That's in not too long, right?
Yeah. I think the biggest issue is the whole trust factor, just because people don't really trust new startups that issue stablecoins. Like the reason why like USDT, USDC have been used, their market caps are much, much higher than the other ones, is because they're from like trusted counterparties that people have been using for quite some time.
Yeah.
Like no matter what Bitfinex says is like the next FUD that Tether's going to go down. I mean, like the Tether FUDers have been going at it for like 6 years at this point.
It's Bitfinex.
And like I think it's a testament to the people at Tether just like maintaining the peg, maintaining the company with no real issues.
Of course.
Sometimes it falls off peg, but that's only due to market fluctuations. But as far as I know, redemptions for Tether have never gone offline. Like you could always redeem Tether. And then there are people who have made quite a bit of money just arbitraging the FUD.
Yeah, of course.
It goes off spot. They're just buying up Tether and redeeming it at 1-to-1. I think they charge like a 10-bit fee, which is why the arbitrage isn't that great, as opposed to USDC, which I don't think has a fee. But yeah, it's just like the long-term trust in these companies. And I guess the crypto space as a whole is there are a lot of scams, there are a lot of hacks, there are a lot of like well-known companies or high market cap companies that do go down. Yeah, it's difficult to build something that's competitive in that regard. Like you can offer a better product, but like there are people who just won't use new products and just use the traditional products they've been using for years.
Yeah.
And I think what's great about this is, I mean, it is very boomer to be buying US treasuries on chain, but this is DeFi, so there's going to be a basket of these things.
Yeah.
So US treasury is a natural place to start, but there will be other stuff. Before you know it, you can buy Argentinian treasuries on chain.
Yeah.
No, of course.
Yeah.
This always happens.
Yeah.
As soon as something starts, and then obviously you're going to be able to leverage up the U.S. treasuries.
Yeah.
Of course, that's going to be the case, right?
Yeah.
And as long as the rates on Aave for the USDC is like 3.5%, that's like it's 2% there, right?
Yeah.
So until it closes.
Yeah. And it's all denominated in US dollars. So in theory, like you can loop it a lot of times just because the liquidation, it's not like you're borrowing one asset that isn't correlated with the other asset. They're essentially the same asset. So like the liquidation risk in theory shouldn't be that high. So you can have like pretty high yield with not that much initial capital just by looping your investment over and over again.
And I mean, then we'll see the Aave rate go to 5, right?
Yeah.
Well, go to whatever is the best you can do, considering the risk and everything.
Yeah.
And then what will Maker do? Because are they on 5 now?
The DAI rate is 5%, I believe, on Spark. So like you can deposit DAI and you get 5%, which is, I believe it's just a fixed 5%. They don't have any plans on adjusting it. I think borrowing DAI right now, like their protocol is known as Spark, and borrowing DAI right now is also like so what people were doing initially when it came out was you could deposit like wrap Lido Ethereum or like wrap Bitcoin or various other assets and borrow DAI. And the DAI borrow rate was like well below 5%. I think it was like 2 to 3%. Yeah. So like you could deposit those assets, borrow DAI against it, deposit DAI into SDAI, and then make a guaranteed like 1 to 2% from the borrow alone. But then I think the market is evened out so that like the interest rate and the borrow rate are essentially the same now. So that strategy isn't as good.
So basically, all of this will change pretty rapidly.
Yeah.
Once we get all the. Well, it's interesting because U.S. Treasuries, I'm sure they will come, and everybody will say, "Oh, it's risk-free." So the Aave borrow rate will hit 5%.
Yeah.
But then somebody's going to be like, "Aha! But have you thought about Spanish Treasuries?"
Yeah.
Because also safe, but just a little bit more spicy.
Yeah.
And then it'll go all the way down.
Yeah.
until people are just repeating, will be repeating like something like a Luna crisis.
Yeah.
But it will be on the South American bonds on chain, because they will just like when they had the bond crisis in South America back in the day, everybody was like, no, this is fine. This is fine.
Yeah, it's like the meme with the dog in the room and everything's on.
Yeah.
Like, this is fine. This is fine.
So man, maybe we'll have like a weird, like a weird bond crisis because of DeFi, because they'll just start issuing more bonds from weird countries, right?
Yeah.
Not weird countries, but
It doesn't
countries.
even have to be countries. Like I'm thinking, like,
of course, yes.
You could be like corporations or like corporate debt, stuff like that. So it's just so that you have like maybe not major companies, but like a pretty large market cap real world companies looking to issue debt on chain.
Yeah.
They can issue debt and pay the risk profile is obviously a lot higher if they can get debt at, let's say, 10% interest without having to go through like like the whole real world process of finding the counterparty, instead just issuing it on chain and like anyone can buy it. I feel like that might take off as well.
I think that's going to be huge. We did an episode with Max, and we'll link to that. But that's what he wants to do.
Yeah.
I think he's taking a route where he's actually making it legal. So I think that's why it's slower than everybody else.
Yeah.
But they're also doing isn't it an RWA conference or something you were mentioning to me?
I think that's
in
now.
New York. Yeah. This is like actually
That's now.
It's the first time I've ever heard RWA real world
conference.
Yeah. But there is a full RWA conference. I think it's this week.
Yeah.
In New York.
We're missing out.
Yeah.
We're missing out on all the alpha there.
I don't understand. I thought like DeFi was illegal in New York.
Yeah. I'd say also like
So they're all builders. They're not actually users.
builders. Or just show building.
And they're only on testnet.
Yeah.
They don't use it on the platform because they can't, right?
I would say like the overall sentiment I got while we were in Singapore was a bit different than crypto was previously. Like I feel like in the height of the bull market, these conferences, anywhere you go, there's just people with a new startup that doesn't really do anything, or like a copy paste, like we're going to launch a DEX, or we're going to launch this or that. I feel like there's a lot less shilling around. I talked to maybe like 100 people, and I don't think any of them really showed me anything that they were developing, or that there were no ICOs. There was no like buy my shit coin. It was just like a pretty meaningful discussion on crypto, which I think is it's a good state of things.
Yeah, I mean, you get a different crowd, right?
Yeah.
I think you get more people who already have a runway, or at least a product that makes sense. Somebody else believes in them.
Yeah.
And not so much like the Denta coins. And
There is a lot of people trying to, figure out new pivots for their company, or basically promote it in a way where they're developing something useful and they wanted a user base, but it's not like they had anything to sell. But I mean, I think there's a huge difference between developing a DeFi platform where people can earn yield and promoting that versus like developing a DeFi platform with some sort of like tokenomics native token and trying to sell their native token.
And one other topic, which is like you cannot run away from, is Binance FUD.
We heard a lot of Binance FUD. We had a lot of discussion on Binance.
It's so extreme that you'll be at some like side event at a bar, and you go up to somebody, you're like, oh, hey, I'm Andres. Nice to meet you. What was your name? Frank? Yeah, I have heard about the Binance FUD. It's like, people would talk about Binance. They would say their name, the company they work at, and then it's like, what do you think about this Binance FUD? Like, what's the deal with that?
Did you bump into many Binance employees or
Zero?
There were no. I don't think I ran into any Binance employees there.
No, I don't think so.
Because when I went to Token 2049 in London last year, and it was just as FTX blew up, and there were Binance employees there, and they were shitting all over FTX.
I didn't make it to the venue.
That actually, we actually didn't go to the venue, but that actually reminds me that there was a story about, I forget the name of the exchange now. It's like a Hong Kong-based exchange. That's the J, like JPEX or JTEX or something.
Oh,
like that.
M6?
No. It is, it's JPEX. I think
JPEX. Yeah. So they had a booth at Token 2049, and then like after day one, the news came out that like the exchange was shut down, the government had shut it down, the founders all got arrested. Like literally the next day,
And the booth is like,
well, the entire booth got emptied out, like everything in it was and stuff like that. Like the booth itself rugged within like 24 hours, and like those booths aren't cheap. Like I think like the fees are like around like $20,000 to $50,000.
That's for
where your booth is. So.
Probably 20K like for like a smaller one too. Probably goes up from there.
Yeah, so the Binance FUD, it's really vague, but after, like, especially after FTX, but many other things too, everyone has the same feeling, which is like when you have this like very uncertain feeling, you're not having as much money on Binance as you used to.
Yeah.
I'm not saying there's a bank run, but there is this like weird bad juju everywhere.
Yeah,
there is this like dark energy. Everyone's worried because if something happens, like it is really, really bad.
It's interesting that the market sort of has responded to all the Binance FUD. I mean, if you look at the market share Binance had versus other exchanges post FTX, it might have been around like 60 to 70%. And now it's a decent amount below 50%. So even though volumes are down everywhere.
You're not compared to DEXs, right?
What?
This is centralized.
Centralized exchanges. Like if you look at like spot and perps combined, these numbers could be wrong, but I'm pretty sure Binance, like after FTX volume was essentially zero, Binance had somewhere around like 65-70% of the global share, and now it's down to like 45%, I think, which is a pretty big drop off. So also keep in mind that global volumes are down quite a bit since then as well. So not only are they losing market share relative to their competitors, but they're losing volume as a whole because the entire volume in the ecosystem is down quite a bit since then. Yeah,
I mean, I'm the same. I try not to keep my money on exchanges, but with FTX, I was like, this is fine. But now with Binance, which is larger and hard to say, but maybe more trustworthy, I'm just not to the same degree I would used to. Like in fact, I would rather have my money on Betfinex right now. I can't explain why. It's just how I think.
Have you? I've seen you going at it a little bit on Twitter lately.
Adam Cochran.
I've seen some.
That guy is like an absolute idiot. Like I don't know anything about him. But he's like I've seen his Twitter from time to time, and he tweets like once every like 10 minutes. So like he just must be by his computer all day, and it's all just like Binance FUD. Like when the Curve stuff was coming out, it's like Mitch FUD. Mitch is broke. He's going to get liquidated. The Curve's going to zero. I feel like both situations were fairly unlikely, and we're in some like common group chats, and I even messaged him. I'm like, if you want to bet on these things, like we can wager. Like I could be wrong. Like it's not like I have insider information, but I think it's extremely unlikely that Binance just goes insolvent and blows up the way FTX did. But the way he doom posts, it makes it seem like it's like the only outcome. It's just a matter of time before this happens. So I mean, if he truly believes this, he'd bet a little bit. He can make a little bit of money on this theory against me, and I'm willing to gamble. Whatever he wants on.
I did see something that he posted when he was saying that there was an update coming soon. This was like last week. We'll have to put the tweet up there, but he was saying he had some sort of information that he was leaking to the press or something. But I don't know. Nothing seems to really come from that.
I don't even understand what he's even saying. Like I don't believe it for a second. Like he has these secret sources just because. So what he's saying is he has like a Binance insider that is just tipping him the information. Why out of all people in the world would it be him? Like these Binance insiders can talk to anyone in crypto about this.
So he's not like the Washington Post of Twitter of crypto.
He's just some random guy with a Twitter account. He like I don't even know what he does in crypto besides doom post about shit. And then like real news, you talk to people like on the inside, exchange operators, people with like large funds, people with large positions in Binance.
They would pay you for this.
And
they would love to know.
Like I've talked with a lot of these people. Like when we were in Singapore, I talked to the CEOs of some major exchanges and asked them like if any of this is substantiated. And the most I heard was the DOJ is going to come out with something against CZ. Pretty soon. There was nothing really about Binance itself, Binance insolvency, which is like the biggest issue in the matter. Like if stuff comes out against CZ, I feel like Binance as a whole would be fine. At worst, CZ has to step down. Someone steps up.
Yeah.
CZ moves him and his companies away from Binance.
Yeah.
But like the exchange should operate, with or without him. I mean, like the business model is built up there. Like the whole infrastructure is already there. Mm-hmm. Yeah. So other than that, I don't think there's anything substantial that at least I've heard or the people I've talked to have heard. But it's always more fun to speculate on just like random stuff like
especially now.
Yeah,
There's nothing going on. So, well, there is stuff going on.
But do you think there's any likelihood that they're at least somewhat leveraged on their own token?
Yeah,
It could become difficult to operate if it went to $10.
Yeah. So like there was like a theory that Binance was spending like whatever money they had buying back their own token in order to hold the price up. Mm-hmm. So like you can sort of compare it to the FTX situation where what was it, the dollar amount they were defending? Carolyn said. Yeah. $22 that they were defending that because, but I don't think Binance has that many. So like the issue with FTX was they sold a huge percentage of the supply to Binance, who's like a direct competitor. But Binance was like openly dumping it on the market. Like CZ made a tweet saying, we're going to start selling these tokens. And then everyone that holds the FTT token is like, oh, well, if CZ is selling, maybe I better front run his orders. That probably added quite a bit of sell pressure. But I don't think Binance, at least the BNB token, doesn't have like these huge major counterparties that are actively looking to sell their position in order to hurt Binance.
I mean, in FTX, the problem was that they didn't have the BTC, they didn't have the Ether, but they had, because they had spent it to prop up FTT.
Yeah.
So as soon as FTT went down, then when people wanted to take out their BTC and Ether, it wasn't possible for them to buy that back with the FTT and stay solvent.
Yeah.
So I guess what I was wondering is if you think that Binance has all the things that they owe people.
I think they do.
Then yeah, of course. It's like a big company. Even a public company, if their share price starts dumping, stuff does get difficult because they borrow money all the time as a natural course of business. And when your share price dumps, then I guess the rates you have to pay go up and people are less willing to do business with you. I don't know if to use that as collateral, but things get tough. But if they're selling something, you should be able to continue doing that for some time.
Yeah.
So I was wondering like if Binance, it sucks if it dumps, especially for the major holders, which I think are employees, but they would be able to keep running the exchange.
Yeah. So I think this is a lot different than the FTX situation because I think CZ, I mean, I'm just speculating here, but CZ is a bit more level-headed than Sam. He's not publicly donating like hundreds of millions of dollars to a politician. He's not spending hundreds of millions of dollars on like celebrity influencers and stuff like that. I mean, he is still spending some, but it's not to the degree that Sam was spending. It's not as aggressive, but it's also not as big compared to how big their company actually was. And the other thing is just like at some point it was pretty obvious that FTX didn't have the money when you track the cold wallets and you realize they don't have cold storage and like Alameda was moving funds around. I remember talking to one of my friends about this. He had a position or he had a balance in, I forget what token, but it was like, it wasn't a high market cap token, but I feel like FTX lists just a bunch of tokens. So he had a balance there. He was using it for like the lending collateral market. And he looked at the FTX reserves and he realized they didn't hold any of the tokens. So he figured like, well, what happens if I withdraw all this token? Where does the funds come from? Mm-hmm. So he put it in a withdrawal. And then he realized that Alameda went on chain, did like a DEX swap in order to buy the token to send to him. Yeah, at that point, I feel like Binance also does
that's called being short, I think.
Yeah.
Like you're short in the sense that you don't have the thing that you owe.
Yeah.
Oh, wow.
But I feel like Binance at least does a decent job doing like the Merkle proof of reserves, and they're fairly transparent about it. But obviously, people will give them shit, and it's not 100% guaranteed because there are ways to sort of fake having the assets that you do have, or like maybe you're borrowing this asset but you have a debt positioned elsewhere that people don't know about, but they're at least making some of that information public. Whereas FTX, I don't think they ever did, a proof of reserves ever on their site, or like the Dune Analytics or whatever third-party site dashboard. So it doesn't feel like an FTX situation is going to happen, at least in my opinion. But like if a friend new to crypto asked me, where should I deposit my money? I would tell them at least like Binance might be a little risky. I don't have all the information, but there's a lot of people that think that Binance might not be doing so well. But other than that, you can't really say too much with certainty.
What's the price of BNB now?
I want to say it's around $200.
Is there a price you would buy it at? Like if it went to that price this week?
I'd say if it dropped like 40 or 50%, I'd buy it.
Yeah.
Assuming that there wasn't news that we're insolvent.
Okay, if it was just that Adam Cochran's doom posting had made it go down 40%. Then you'd be fine with that.
I think I'd be fine with it. And like the BNB token should be going down just because even if they're fully solvent, their exchange isn't doing as well as it was ago, right?
Nobody is.
Yeah, so that the token is representative of their exchange, right? It's like
it's like the future income potential. Right?
They have a buy and burn based on the company revenue. Also, like the use cases for BNB, like one of the biggest ones was having access to the Binance Launchpad, where you would deposit BNB and then get access to like all these new tokens. But like the current ecosystem, there isn't really that much room for new tokens to sort of launch now on a centralized launch pad and suddenly gain like large market share. So that use case now is basically gone. And then other than that, obviously it's used as like a trade fee discount. Yeah. But with the less people trading there, and like they're also offering like some markets in order to incentivize people to trade more. They're offering some markets at zero fees. So the use case goes. The use case is lower and lower at this point.
I see. Okay.
What was the other thing this week with CEFFU? Which is a funny name.
CEFFU. Yeah. So as far as I understand, CEFFU is CZ's company that I think it's just Binance custody for institutions, and they also do OTC for institutions. I read a little bit through the DOJ statement. So from my understanding, CEFFU was not supposed to interact with Binance.us because like there was the operational side of Binance.us wasn't supposed to touch
not to serve them.
Yeah. So if, for example, if you deposit funds on Binance.us, the funds can't be going to this international company to be traded and stuff like that. So the DOJ, I believe, made a probe about that, and I think CZ came out today and said that this is bullshit. The Binance.us funds weren't related at all to the CEFFU.
Yeah, he said doesn't use it and has never used it. Is what he said.
Yeah, which I don't know. It may be true. It may be not true. Obviously, he's incentivized to say that. But I think the only suspicious thing with Binance.us is all the execs just like leaving. Like basically everyone that was there a year ago, like at least all the top management people are all gone. And like the turnover at CEO has been, I think there've been 3 or 4 in the past like few years.
So it's like,
but it sounds like a lot of headaches, though, right?
Yeah,
like that job doesn't really sound like
it's not a great job, and Binance.us isn't a very good exchange. Like,
no. You're talking about executives at Binance US?
Yeah.
No, that's just imagine.
Yeah, it's literally shit.
I thought you meant Binance International because there's a lot of that's a headache too.
Yeah.
But people love that job.
Yeah.
But Binance US is like you got $10 million a day in volume. Yeah. It's just like
on the phone with the regulators.
Yeah, you get the regulators updating.
You probably have like gunslinger showing up to your door at like 10 p.m.
That's like
that's terrible.
Hey, anybody want to grab a coffee?
Yeah,
Gensler. and your competitor is Coinbase.
Yeah.
That is very tough. So I understand that.
And they don't have any stadiums either.
At least like if you're like on FTX Blockfolio, you get to like party party with Shaquille O'Neal, stuff like that. Tom Brady. If you're in Binance, you're just like sitting in Washington with a bunch of suits and you just hate your life.
Can't imagine.
Understandable.
Yeah, but honestly, this actually kind of does a nice segue into some of the FTX drama that's been going on this week. I guess there was to do with Sam's parents that some news to do with them that's come out, right?
I think FTX is looking to claw back some money that was paid out to Sam's parents. And the court documents that came out today were especially interesting because it seemed like Sam's dad wasn't happy with how much was he getting? Like
He was getting 200. He was getting $200,000 a year as an employee of FTX US.
And
Did it say what his job was?
No. and he wasn't happy with that. I think he was looking for like $1 million a year.
Yeah.
And he basically said he would tell Sam's mom
The wedding was amazing.
that Sam wasn't paying him enough.
No, but I thought it was worse because it's like he emailed somebody who works, an executive, I guess, at Binance US, sitting in a desk like a professional and says, hey, I did the math. You said I was going to get paid $1 million a year, but if you just look at what I'm getting monthly, that only adds up to $200K. And he sees his son, the CEO of the company, but then there's like a threat at the end where it's like, I'm going to tell your mom.
Oh my God.
This guy just cannot, I don't want to drag people into this, it's hard to know things, but it's just like, if my mom, if I ran a business of that size, I don't think my mom would just be on the payroll. And if she was, I hope she would be happy with the $200,000 a year. I hope so. And the other one was to Stanford.
But I think Stanford has already agreed to return the funds. They said basically that they would return the funds, but I'm assuming Sam's parents are not going to return any of the money, and they're going to.
No, but the phrasing. So maybe the place I read it was incorrect. It was like Gecko News, but the phrasing was that Sam's dad had donated the funds to Stanford. That's the way it read to me. But it honestly that doesn't.
But it wasn't even if you look at how many assets as well were put in there were a lot of assets. It was like tens of millions of dollars of assets, and especially property in Bahamas, I think, as well, right?
Oh no, I read it as that like Sam's dad had donated FTX US's funds.
Okay.
Maybe that was his job. It's called what's it called when you not invest, but like your
philanthropies.
Yeah.
Effective altruism. Although it's not very effective, right? Because like the entire concept of effective altruism is you have like X amount of money and then you distribute it in a way where you can do the greatest amount of good with that amount of money. But
are you saying that mosquito nets are more effective than Sam's dad?
Slightly.
I cannot believe it.
Slightly. Yeah. Going back to CZ and the Binance thing, I feel like that's another reason why Binance is more likely to be solvent is because you don't see CZ around, trying to be this like effective altruist. I mean, CZ is, he does have some charities, but he also has a lot of money. He's been in the crypto space since 2013, whenever OK Coin was around. Binance was founded in 2017, right? And since 2018, middle to end of 2018, it's been by far the biggest exchange. So I feel like he's made quite a bit of money in crypto, and it doesn't seem like he's being too outlandish with his spends, although you don't really know exactly what he's up to. But at least publicly, he's not, buying off politicians. He's not sponsoring like 1 million sports teams, stuff like that.
We've not seen the bit where we see what the Binance management do with all their money and all the CPRs and stuff. Yeah, we've not seen that yet.
Oh man, I'm just thinking Wolf of Wall Street. Do you think a large part of this is the fact that he is Chinese?
I don't think so.
That he's not American?
I doubt he's ever in China, and he probably has some additional passports. Other than I feel like all the major Chinese founders in crypto, that they're highly incentivized to protect their tracks. So like you can go as far as, our guy Justin's son basically buying a country so he has diplomatic immunity. I mean, I feel like if you've made it this far in crypto and you're that wealthy, like you probably have at least a team of lawyers figuring this out, so that like the worst case scenario is you get busted by the Chinese government and that they lock you away. They don't care about your net worth. They'll do it to billionaires. They'll do it to whatever.
They have.
Yeah, exactly. So if I were in his shoes, that would be my number one priority. Like the difference between having like 10 billion and 50 billion isn't that huge versus like 50 billion versus being in Chinese jail. The risk reward is quite great. So I feel like at least a majority of these people are doing everything in their power to protect their tracks from.
No, I was going to say, do you think there's not a sentiment in the US that they don't want somebody who's at least from China running this new sector?
Yeah. I feel like the US doesn't want, they basically just want to shut down the sector, or at least make as much money off of it as possible. Like even recently, I think yesterday it came out that I think it was the DOJ said that they were going to start going after DeFi protocols and venture capital funds. And that's especially bad because a lot of these startup like DeFi protocols or the smaller venture funds, they don't have like $1 billion like Binance does. So like a lot of these legal fees will add up for them, and they might just have to, even if they're in the right and they're not violating any laws, they might just have to shut down because they don't have the fees to go through like a drawn out legal process in order to keep their platform, which is, probably doesn't make that much to begin with. They don't have the money to keep it alive. And
with it's very hard to envision a DeFi that is like a bank or that is like PayPal. Yeah. Because I don't know what that would look like. Do you think they want that, or is it better just like, get rid of all of it?
Didn't PayPal come out with the stable coin, or they're coming out with the?
It's really out. I think it's really.
Yeah. So I think maybe they might want to weed out all the current DeFi players in order to clean out the landscape and let like the big US institutions like grab some share of it. So like if companies like Venmo, PayPal, Cash App, I don't know the other major ones, but if they start getting into the crypto space, where there are millions and millions of people who already have crypto, or not crypto, like these apps on their phone, like I don't know what the PayPal app generates, but it must be great because it's pretty easy to do. Transactions peer-to-peer. Same with Venmo, it can link directly to your bank. So if they clear out like these smaller DeFi players out of the landscape, it leaves a hole, and then like these major US companies can come in and take that share.
Yeah, so like replace Uniswap with like Venmo Trade, and Aave with PayPal savings,
identity, and everything.
They're gonna call like PayPal Colati or something. There's something not cool. Yeah, that would be, and then I guess you would have the US with one suite of products that, it wouldn't be very interesting, I think.
It also would
and
be
then
very
like
good.
International.
I feel like you might see that on Base soon.
Yeah.
Because
Fed chain.
The Fed chain itself. Although there are some like very non-Fed activities that have happened on Base already. So the Feds don't seem to be patrolling their Fed chain very well.
Well, think about it. The Silk Road was robbed by Feds. So maybe the Feds are rugging on Base.
Yeah. Maybe the Feds are the ball deployer. They blamed it on some random crypto account where it's just like the Feds running retail. Who knows?
All right. Thanks for joining us, guys. See you next time.